fam. So, nurses, do you think that $1 can't change your life? Well, think again. This tiny amount can grow into $60,000, but only if you choose the right type of investment. Today, I'm breaking down ETFs, index funds, and bond ETFs. By the end, you'll know which might be the best choice for you. And here's the thing, one of these gives way more flexibility than the others. Let's start there. So, after a 12-hour shift, you just want things to be simple. Well, that is how I feel about investing. At first, I thought you needed to study charts, buy individual stocks, and basically have a finance degree. But then I discovered index funds, a very nurse-friendly way to invest. And here's why it's so powerful. An index fund is a basket of stocks, so it's like S&P 500, and it has 500 of the biggest US companies in it. You buy it once per day at the end of the day price. It's simple, it's steady, it's set it and forget it. Think of an index fund like an IV drip. It's steady, it's consistent, and you do not have to micromanage it. Sounds perfect, right? But what if you want that same basket of stocks, but with the flexibility to trade it whenever you want? That's where ETFs come in. Now, ETFs are also baskets of stocks, and they often track the same indexes as index funds. The difference is you can trade them all day long, just like a stock. You can buy and sell instantly on apps like Fidelity and Vanguard. Think of ETFs like PRN meds. You can take them when you need them. They're not on a schedule. Now that flexibility sounds amazing, but here's the problem. Stocks can be risky. But if you want something that stabilizes your financial vitals, so to speak, you might want to look into bonds. Bond ETFs invest in government or corporate bonds. They're safer, but the trade-off is lower returns. They act like a stabilizer in your portfolio. Think of bonds kind of like a vent. So now you have stocks for growth and bonds for safety. But here's the million-dollar question. Which one's best for nurses like us? In 30 years, that $1 per day could be $59,000 in index funds, $49,000 in ETFs, and $23,000 in bond ETFs. So what's the answer? It's not about one being better. For most nurses, it's best to do a mix. For example, 80% stocks and ETFs for growth and 20% bonds for stability. The real key isn't perfection, it is consistency. So nurse fam, now we know index funds are simple, ETFs are flexible, and bonds keep things safe. But here's the real secret, the type of account you hold things in, like a 401k or an IRA. It can mean the difference of paying zero taxes or losing thousands. Don't forget to check out my video on IRAs versus 401ks. Please don't forget to subscribe, and don't forget to grab your free copy of the Nurse Investing Handbook in the description below. From Bedside to Bank Account, I will see you in the next one.